Hello, everybody. It's Bob Anderson, and it is April 12th, 2023. I've got some exciting news. I have, for about the last week or so, I have been participating in a Discord group, and I am going to put the link to that Discord group down below. Now, it's not my Discord channel. It is a subscriber's Discord channel, and that subscriber doesn't even know I'm saying this and putting this in this video. But I have been in this group for over a week now, and it's like-minded traders. It's a lot of people learning the strategy and whatnot, and using the same charts and talking things through and asking each other questions and stuff like that. I just think it might be helpful for some of you. I'm going to put the link to that Discord down below in this video. Now, the point of today's video is to discuss the most common questions I get asked in that Discord group, okay? And that is the 1-minute continuation gold line trade and the 5-minute continuation gold line trade, okay? I know I've talked about them quite a bit on this channel, but sometimes just hearing it over and over again will help, and I'll try to clarify some things that I find that people are kind of missing in their questions. So first, let's talk about the 1-minute gold line trade. As I've said, it's a continuation trade off the 1-minute gold line, and I have said that I have given you guys my opinion of trading it between like 9:45 and 10:30 for the equity markets. And but I have alluded to the fact that you can trade it more often than that, but the market has to be showing you signs with rhythm that it's hitting that spot and going, and hitting that spot and going, which a lot of times it doesn't. The market has a tendency to just kind of consolidate, and it goes off the bigger time frames, i.e. the 5-minute gold line. And so that's why I like to leave it there. But when you get better at doing this and better at recognizing when the 1-minute gold line will work beyond the 10:30 time, you can use it, beyond that. But most traders just need to have fixed time periods until they can figure out the bread and butter of it. So anyways, you got your 1-minute gold line. Let's just say that's it, okay? And let's say it's going up. And I talk about the fact that you need to have, push, 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 push. That's what's pulling the 1 minute up, and then a pullback. But with this trade, and when you start seeing it, you start feeling the rhythm, you'll get it. You'll get exactly what I'm talking about. You need the top of the candle to the left on the pullback to be on a long to be higher than the top of the next candle, or equal, but not less than, or equal. It can be equal. And then the candles keep coming back. All right? Now, as soon as this candle here pierces that 1-minute gold line, and you look to the left, remember, look to the left, and you've gone into new territory. You're not seeing other pivots for like the last hour, okay? And the market's moving in a direction. It seems to have picked a direction. As soon as this candle closes, you have your buy stop right there. One tick above that. Okay? One tick above the close of that candle. Once that candle closes. Now let's just say the next candle opens. And it opens here and does this. What do we do when this candle closes, considering its head is above the gold line and its bottom is still, on the gold line or whatever, but it has not broken the top of the candle to the left. Okay, what do? As soon as that candle closes, we drag and drop the buy to one tick above that one. Okay, I mean, I can't make this any simpler. Now, let's just assume price now kicks into gear and takes you in the trade. What are you going to do? Well, you're going to have a stop that throws out on your chart somewhere. Let's just say it's right here. I use 10 tick stop, 20 tick target. That's usually how I get into all my trades. Now, if I'm into this trade right here that I just showed you, as soon as my ATM kicks me, so let's just say our target is here. That's our target. And this is our 10 tick stop. As soon as I'm dragged into this candle, into this trade, this candle right here now becomes my bottom. So I push this up and I put my stop one tick below this candle. Okay? The candle that my entry candle broke to the long side. Okay? Now, now I'm going to tell you how I do this all the way to the point of break even. Okay, now let's say the next candle opens and it breaks the top of this candle. Okay, so that's your entry candle, right? And let's say this candle goes higher than this candle and closes. As soon as it closes, I drag my stop to there. One tick below that candle. And I do that until minimum I get to the point of break even. And then once I'm at break even, there's my stop at break even. We enter there. Once I get to that point, I then, kind of make the decision. Do I let it run to my target? Do I not? I just kind of look at the pivots. Okay? But that is how I manage my trade. So that's how I, keep myself out of 10 tick stops, whatnot, because my average loss, I've said before, is probably about 5 or 6 ticks. My targets, I try to get 20. Sometimes you don't. Sometimes you get 15. Sometimes I see, sometimes, let's just say this. Let's say this is 20 right here. Let's say that's 20 right there. And you came in from such a high pivot. Oh my God, there's room. There's room for this thing to go. You might want to look at bringing this up, because your real resistance is going to be at the previous high. But anyways, that's how I can squeeze potentially more money out of my trades. Or let's just say your target is just a tick over that, and price runs up to that. Well, I'll have a tendency to grab this and move it up, because if it breaks that top, it has a tendency to run some more. But that's trade management. First, the most important thing is to learn how to get into the trade properly and how to manage your stop properly. Okay? Now, this crossed over. Look at this. This crossed over and came up and did your first test. So let's just talk quickly about this, and then I got to get to the 5-minute gold line because I want to show you guys examples. So this comes up, goes over, breaks down, does it again, comes up, goes over, and this is going to be touch number 3. We've talked about that. Touch 3, we try not to take that because that's normally a fail. Okay? So, why do I bring that up? Well, because remember, you have a 5-minute red line that is trailing along on this. It's a 21 SMA, and it's on a 1 minute chart. Okay? The way to go back to doing these trades again is you have to have a candle. It's called a reset. After your third attempt and it fails, you have to have a reset. A reset is a candle body, wick, all. The whole thing. 1 minute below that red line. The whole thing has to happen below that red line. And then it pushes back up, creates a new pivot high, comes back to your goal line, bam. That's starting all over again. And by the way, that routinely happens. Routinely happens. I can't tell you how routinely that happens. That's where I come up with the saying, have you seen this movie before? Because these movies play out over and over again. All right, so let's talk about the 5-minute gold line, which is honestly probably the best trade. It certainly translates to more markets. I mean, it works really well in the ES. It works really well in oil. It works phenomenally in the RTY. The 5-minute gold line. So remember, the 5-minute gold line is your 9 EMA off of 5-minute data. I'm going to put the links down below of these charts, okay? So, of how to set these charts up. Anyway, so here's your 5-minute gold line. Again, here's the thing about the 5-minute gold line that makes it more difficult to understand what's a valid setup and what's not. And that's why I want to get to the part of showing you some of these. The hardest part about the 5-minute gold line is because price has a tendency to be way away from it before it ever comes to it. You don't have to worry about the smooth pullback. You just need a consistent style pullback. What you don't need is any false breaks long, then pull back again, or more importantly, a pivot to your left that you break before or even after you've hit your gold line. That's like, so let's talk about that. So here's your price, and it goes up, and it goes down, and then it goes up, okay? And then it comes down, and then it goes up. Now remember what it's doing here? It's running off that 1-minute gold line. Then it goes up, and then it rolls over, and it comes down to here. This line right here, okay, let me get this. I shouldn't have done this one. I shouldn't have done this one. I shouldn't have done that one because I didn't do it breaking the high. Let's just talk about this first. This will do this all the way back, okay? But what's more important is this candle forms here and does not break that pivot that gave you the pivot high. If it breaks that pivot to the left that drove up to the pivot high, I don't take the trade because it's a sign that we're stepping back. If you remember, I've told you guys, they go in lines. When did this one start turning? When did this one right here start turning? Well, A, it didn't pierce that. But B, this broke this and this even. Okay, and that's when the market rolls over. So what you're trying to avoid is getting into a trade where the market has shown signs that it's going to roll over. So the ideal trade setup for the 5-minute gold line is this big crossover that we just talked about. And interestingly enough, price, and you'll see this, it's so amazing to see happen. Price to hesitate, and wait for that 5-minute gold line to cross past here. Okay? Then price will try to hit it. And then you do the same thing. When that candle closes on that 1-minute chart, when that candle right here, so we go back over here, Very similar concept. Get your candles that come down, candles that come down, your candles that come down, your candles that come down. And when it pierces that gold line, when that candle right here closes, as soon as it closes, get your buy stop right there. Okay? If the next candle forms and it's still over that gold line and it closes, once again, drop your buy here. If the next candle opens right here and closes and never pierces through the gold line, trade's over. Forget the fact that it pierced this pivot over here. So you've got to have the candle, the wick, doesn't matter if any part of the body, you have to be entering the trade, in a case of a long, north of that 5-minute gold line. But only by one tick. You got to be one tick up, and you've got to be entering that trade one tick up. You will notice, by the way, if you, again, from watching these things, here's what you're going to see so many times. When this thing breaks below that gold line, forget this pivot for now. You're going to see a candle come up and go boink, boink, and it's going to hit the back side of that gold line, and then it's going to roll right over. Because either side of that gold line is either support or resistance, depending on what side of it you're on. So you don't ever want to be taken along, for example, south of that 5-minute gold line. You don't ever want to be taken a short, for example, north of that 5-minute gold line. And the same thing with the 1-minute gold line. I don't know if I'm losing you guys. Let me show you some videos. Let me show you some examples, because there was plenty of them today in the ES. All right, so here we are. Let's get this. By the way, the one thing about the 5-minute gold line, it works all the time. It doesn't really have to be shut down. You don't want to be taking it, say, at lunchtime when everything's slow. But look at the market run down through the overnight open. Run down. Bing, bing, bing. Here's a pivot low. Look to your left. Have you seen us here in the last hour? Oh, hell no. We haven't been here in hours. We rolled up, hit that 5-minute gold line, short, bam. That was 5 points in one candle. 5 points, 1 minute. Matter of fact, your entry would have been 31 even. This ran down to 25 even. That was 6 points. 6 points. Anyways, and why is that? It crossed over the gold line, and it was the first touch. Bam. Okay? So let's talk about the 5-minute gold line, for example. Okay, so, or we can even talk about the 1 minute. Let's see if we have any 1 minutes. Here's a 1 minute. We broke down, up, down. How much was that one for? Oh, that wasn't a smooth pullback though. See, this extended. I just noticed that. I wouldn't have taken this one because that was not a smooth pullback. Here's a perfect example of a non-smooth pullback. Let's look at this. Even though the trade worked, plus it was into the overnight open. But anyways, see how you pivoted low, then you had your candle actually equaled it, then you had a higher low, but then you had a lower low. This candle pierced lower than this one. So that's no longer valid because this candle did not pierce these two candles. If this candle right here had pierced these two candles down to here and then had this pullback, that would have been a setup, even though you're not necessarily back into the overnight open, but that would have been a setup. All right, let's see here. Now remember, I only look at the overnight open. I mean the 1 minute gold line until 10:30, which, geez, I don't even know if we had any because we're on the wrong side of the market here. See, we're below the red line here, so you want to be taking shorts, but we're above it. We're above price. So I don't even know if I don't even know we had a setup in the ES all day. See, this broke right up, so that didn't set up. This didn't go to a new pivot low. That rolled up. With no setups. So far in the ES, I've seen 0 setups. This would have been the first one, and it wasn't valid. And it was too late. It was after 10:30. So let's talk about the 5 minute gold line. All right. So here's one right here. Finally, get down through here, come back up, roll up. Boom, here's your entry right there. Trade failed. Okay, so that trade failed. Why is this a trade? Why would this have been a valid trade? Well, right here. Come on. Jesus. This would have been a valid trade because you had a pivot low. You got nothing to your left for hours, probably nothing to your left for days. And then it rolled up, rolled up, rolled up, rolled up, hit your 5 minute. This one here is the one that hit it, but you didn't break it. This one hit it, didn't break it, then this one did break. That would have been your entry. My stop would have been up here, and I would have gotten out with about 2.5 point stop. So let's go up here. Now, this is where it gets tricky. Okay, this is where it gets tricky. These are the examples I wanted to give. So we had a pivot down and a pivot up to our highs. Okay, and we got these dots that are kind of helping us see. This pierced that pivot and rolled up. Now, that's not a valid trade to me because we pierced the bottom of this. Okay, but then it rolled up, created a new high, pulled back, and guess what? This is a valid trade. So your long is right here at 44.75. Bam, there's your 5 points. Then this one pulls back. Same thing. Bam. That was a hell of a lot more than 5 points. That was a hell of a lot more than 5 points. Then here's another one. Here's a new pivot high. Rotation back. Bam. Holy shit. Another one, a hell of a lot more than 5 points. This broke through, no trade. As soon as this candle opened and closed and it's below that gold line, no trade. So we had a false trade here that I wouldn't have taken over here, okay? Because this pierced this push up, okay? So this is the new pivot right here. See that? This is the new pivot to here. That's what pushed from here to here. This is your pullback. Here's your long. This pivot is higher than this pivot, and wham. Same thing here. Now this is your new pivot right here. See that? That's your new pivot. This comes down here. This pivot's higher than this pivot. Entry, bam. Okay? Those are your 5 minute gold lines. and I mean, it's the same thing over here in the RTY. I mean, it's the same thing. I could sit here all day and tell you about the RTY. Here's one, straight, smooth back. Here's your 5 minute gold line. Here's your break. Anybody seen that candle? Holy mother. Here's another one. Holy mother. Here's another one. This was not a pivot. This was a rotation from this pivot. Pivot, pivot, break, bam. This is on the wrong side of the 5 minute red line. You're only looking for longs. This one blew through, pulled up. So that's not a trade. Okay. But here's one that is. You had a crossover, pull back, bam. There's another one. Your 5 minute red line. I mean your 5 5-minute gold line. Your entry's right here. See that? That's the first candle after it touched that broke. Bam. That's what you're looking for. You're looking for that first candle after price hits that 5-minute gold line that breaks and has a pivot that it's pivoting off of that's higher, for example, on longs than the pivots you see to your left. Okay? Let's talk about that just for a second on this one. Here's the pivot. There's no dots on it, but here's the pivot. You had your push, your pull, and this is your push all the way up. This right here is your pivot that you don't want to break if you're going to try to take another long. Now, this thing blew up and didn't break this high. So when this thing was rolling back, you never should have been looking to take it. Okay? You got to remember, you're looking to stair step. Like we talked about over here. You're looking to stair step up to a new high, pull back, up to a new high, pull back, bam, through your new high, pull back. You're looking to stair step. If you're not stair stepping in the direction of the trade, then you don't want to get into it, even if the setup looks good. It's got to be showing you that you need that we're going that direction. And the way it shows you it's going that direction is it pierces the pivots to the left, and it validates the pivot that pushed it there to the left by not piercing it on the pullback, either short or long. Okay? Anyways, you'll get it. I'm going to put how the charts are set up in the video in the description down below. Like I said, I'm going to put the Discord down below. Remember, Apex's sale ends on April 18th. That's our affiliate code AGIBQTJY to support the channel. If you're going to buy some accounts with Apex, please manage your accounts. Don't just piss them away. Talk to you guys later. Bye.